The bear market is here, stocks are plummeting, inflation is on the rise, and housing is becoming less and less affordable every single day. It seems millennials just continue to get pounded. Everyone is fearful and new investors might not know what to do in a bear market. Although bear markets might seem scary, they are completely normal and happen on a regular basis. While they can be scary, they can also be a great opportunity to build wealth. Before we jump into what to do in a bear market, let's talk about what a bear market actually is. A bear market is when the market drops 20% from its peak. There have been 26 bear markets since 1926. Between 1928 and 1945, there were 12 bear markets, or one every 1.4 years. Since 1945, there have only been 14 bear markets, or one every 5.4 years. And just because we are in a bear market does not necessarily mean we are in a recession. There have only been 15 recessions in the same time period as those 26 bear markets. With that in mind, you can see that you will go through several bear markets during your investing career. In fact, if you assume you'll be invested for at least 50 years, you will likely go through 14 bear markets. While bear markets can be painful, they've only happened about 22% of the time. Over the past 92 years, only 20.6 of those years have been in a bear market. We are currently in a bear market and we are seeing our accounts fall by 20% or more, depending on what we are invested in, and there could be more pain ahead. The average loss in a stock market during a bear market is 36%, over an average of 289 days, so we could still have another 16% or more to go. But don't fear. During a bull market, the average return is 114% and lasts on average 991 days. A bear market is not a time to panic and sell your investments. In fact, the S&P 500 had half of its strongest days over the past 20 years occur during a bear market. Bear markets will have a lot of volatility, which means there'll be some really big falls and some big gains. This is why timing the market is so hard, because the market most of the time makes no sense and has ups and downs that don't seem to correlate to anything. In fact, very few investors are successful at timing the market over the long run. A study from Schwab that compared 5 different scenarios investing in the S&P 500 index. Number 1, perfect timing. Number 2, investing your money immediately. Number 3, dollar cost averaging. Number 4, worst case timing. And number 5, keeping your money in cash. This study showed that in the long run, it was better to invest at the worst time than it is to hold cash. Although timing the market perfectly does come out ahead, it's not enough to warrant the risk. In fact, investing immediately when you have the money is the best action you can take, since timing the market is nearly impossible. My takeaway from this is to keep investing during the bear market, no matter what. To do this, I have all my investments automated. As soon as I am paid, the money that I want to invest is transferred to my investment brokerage and invested into my favorite index funds. I know the market and the economy is looking pretty scary right now. This is exactly how many people felt in the 2008 Great Recession and the 2000 dot-com bubble. But looking back, we all wish we had had the opportunity to invest during those downtimes. This bear market could get worse, but also could be our time to invest when the market is at a low point. That is why I am continuing to invest during this time, and there's a very good chance based on historical data that the market will turn around, and I will be very happy that I stayed the course. As always, thank you very much for watching, and if you enjoyed the video, give me a thumbs up and subscribe, and I'll see you next time.